What's up, traders? Welcome back to the channel. Here we have the GBPNZD chart in front of us. So a new pair. People ask me to look at new pairs, new markets. So this is something that I want to really cover on the channel and give you guys a more holistic overview of forex markets, futures, options, commodities, whatever else you guys want. Liquid FX is here to do that for you. So here we have the GBPNZD weekly time frame in front of us, and from here we're going to be dissecting how I'm looking at this chart, how to build a narrative, and where I think price is likely to go. So that being said, let's get involved in the video. So here we have structure that's broken to the downside. So we're looking here all the way back from 1999 and 2000. We had a shift of market structure from a bullish trend to a bearish trend over here. So we've seen a shift in market structure here, and since then we've seen price break to the downside again and again. Now from here, it's important to understand where our current dealing range is. So I marked this out on the chart for us to understand. We are currently dealing from this high up here down to this low over here, right? So this is our dealing range. So what does a dealing range represent to us? A dealing range represents essentially the high and the low where we're dealing at currently, and it also therefore represents our premium and discount arrays. So we have a premium up here and we have a discount down here, right? Now from this, we need to understand a couple of things. We need to understand where is price likely to head to next based off this market. So we understand we're longer term bearish, and we have been bearish since this break of structure from 2003. So we've been bearish pretty much for the last 20, 21 years, right? On the very higher time frames on NZ, right? GBPNZD. So now that we're dealing in this range, what are we looking to target, right? What are we looking to do now based off this current structure over here, right? Simply put, if I take you to the side for a second, when price has broken structure to the downside and we see price ranging and coming up, what we can reasonably anticipate is for price to head from discount to premium, okay? Price goes from discount to premium, D to P and vice versa. What do I mean by that? We have a structural dealing range from this high down to this low. So what I would expect is for price to get from discount up to premium, which is up here, right? This is exactly what we're expecting over here in price, okay? So this is our current dealing range, and this is our premium POIs. Now we have a POI over here and a POI over here. Now, very quickly for the people who haven't looked at some of my previous videos, what makes a valid POI? What is it that makes a valid POI? There's three things we need, right? The first thing was need to have that break of structure. Now the break of structure was over here. So this last structural low from April 2013 has been broken over here. So first we see price this high has produced a new low. So we see a break of structure to the downside. We see a break of structure. The second thing we want to look at is we want to look at POIs that are priced correctly in the premium in this case. Because we're bearish, we want to be looking for bearish POIs in the premium. So again, we have our discount over here below the 50% level, and we have the premium. So anything above the 50% level is essentially a premium, okay? So the first thing we're looking at is a boss. The second thing we're looking at is a premium. The third thing we're looking at is a fair value gap in price. So a fair value gap in price is essentially where we have an imbalance between supply and demand, or an imbalance in orders. So we have a fair value gap just over here. This is a fair value gap in price, and we have a fair value gap all the way up here, also a fair value gap. Okay, so these are our three rules when it comes to identifying a POI. It must break structure, it must be priced correctly, in this case the premium, and it must leave a fair value gap. Now, with that being said, how can we apply these concepts to NZ? So what we've seen over here is we've seen price being quite choppy and rangy, and it has been since 2017, right? And we've seen a massive range from 2019, 2020, 21, 22, and now in 23 going to 24. So what do I expect for price to do in 2024? Now, it's important to understand how prices behaved at this premium POI. We saw a reaction over here back into March of 2020. So we saw price react in 2020, and we've seen price react at 2023, so in August. Okay, so with this knowledge in mind, we need to understand we haven't actually seen this POI commit. We haven't seen this POI commit. We've seen price react off it, and has since then rallied up again, has reacted off it again, and has not shown signs of weakening, has not shown lower prices. So from this, we need to understand that this large level weekly supply zone isn't holding. This therefore becomes our next target, our next POI, or our next supply zone, which is deeper in premium, and also leaves a fair value gap over here. Perfect. So overall, from the weekly time frame, we understand that our narrative is pretty much bullish, and it's bullish up until this price point over here. Now, I don't expect price to move in a straight line, of course. I expect price to do something of the nature. I do expect price to rally up to this point, roughly 2.37, 2.37, 2.38, round about this area over here. This for me represents a holistic overview of where we are in price right now. Okay, so if I take price down to the daily time frame, if we dissect price on the daily time frame, what we see over here is we're going to see bullish structure on the daily time frame as we head towards this weekly POI. So this is how I'm looking at daily structure. What we saw over here, if we quickly, this again is essentially what ICT does, right? You need to train your eyes to identify two things. There's two things you need to look out for. One of them is liquidity, and the second is fair value gaps in price, right? So these are the two things that will navigate you on the higher time frames and will allow you to position yourself in high probability areas on the lower time frames. So first we see a massive sweep of liquidity just over here. This is a massive, huge sweep of liquidity over here with the red line. So this red line represents a huge pool of liquidity, and we see the market shift downwards, not breaking structure, but sweeping liquidity. This wick over here is very indicative of liquidity sweeps over here. Large liquidity sweeps, right? Large liquidity sweeps just over here. Now, since then, as this low has swept liquidity, what we've seen over here is we've seen price print a new high. So we've seen a daily break of structure. Now, this daily structure has been complemented by another daily structure over here. So the way that I'm looking at my structure on GBPNZD is very simply a low, high, we saw a discounted retracement, high, minor retracement, and now another high. So we're currently dealing, again, our dealing ranges will be taken out. We're currently dealing between this low and this high over here. So this is currently our dealing range. So we have a structural low and we have a structural high all the way up here. With that being said, we now need to dissect our liquidity and our fair value gaps, just like I said. So I'm going to bring this to your attention again. There's two things you need to train your eye to look at. One of them is liquidity, and the second is fair value gap, right? FVGs or inefficiencies or fair value gaps or imbalances. They all represent more or less the same thing in price, and these are the two things that you need to train your eye to look for. Right. Let's start with liquidity, right? We had a very large pool of liquidity just over here. Trendline liquidity here, very massive pool of liquidity. We see price come in and sweep the liquidity over here. What's the second thing we need to look at? A fair value gap over here. So we had a very large fair value gap over here, which I'm going to mark out in blue. This is a fair value gap, as you can see over here. So price has swept liquidity to the downside and has filled the inefficiency just over here in this region, right? The blue box over here represents an inefficiency in price and a liquidity being swept. And so therefore, this confirms our bullish narrative that price could get all the way up to the weekly POI as established. So where do I see GBP NZD going for those who are interested? Right. Now that we've swept sell side liquidity, right? So this is sell side liquidity, or SSL for short, right? SSL. So once we've swept sell side liquidity, the next thing we're looking at is, you guessed it, it's buy side liquidity. Now, where is the buy side liquidity actually placed? This is our buy side liquidity, right? This is BSL or buy side liquidity. Now, my anticipation is for price to eventually sweep this buy side liquidity and also target this high over here. Now, this high is what we call a weak high. Now, why is this a weak high over here? What makes this high weak? We have triple highs over here, or buy side liquidity. What makes this structural high weak? The reason why this is a structural weak high is simply because it didn't make a new low. No new low, right? This high made no new low. Therefore, it is weak and we target it, right? It is an area of, you guessed it, liquidity. So everything boils down to fair value gaps and liquidity. We're simply moving from one pool of liquidity to the next, one pool of liquidity to the next. So to sum that up over here in the schematic, when we're bullish, what we're essentially looking for is the price to come down, sweep liquidity and head to the upside. So what we're looking for over here is we're looking for price to come into some sort of a discount, fill some sort of fair value gap, sweep some sort of liquidity, right? Ooh, make that a bit clear. Sweep some sort of liquidity over here in red. And our job is to simply target the next pool of liquidity, right? So we're simply moving from liquidity to liquidity, fair value gaps to fair value gaps. It's really that simple, right? So this can be applied to any forex pair, futures, S&P 500 indices, whatever it is you're looking at. This basic schematic can be applied from GBPNZD to about any other currency pair you want to look at.